In today's class, we're going to look at three different concepts under Unit 4 Retail Shop Management. The first concept would be retail accounting, followed by we look at what retail audit means, and then finally we look at a very small concept called as retail store brands or private labels. The accounting is quite different from the standard accounting practices that is followed. We'll look at what that is. It is a form of accounting that lists all stock at its final retail price rather than the actual price paid for stock. It can be a useful tool for detecting loss, damage, or theft of stock. However, it only provides limited details and is not a substitute for traditional accounts. Traditional accounting, you always do the accounting based on the actual price which you pay for the stock. What do you mean by that is, we'll take an example that will be much more clearer for you to understand what is the difference between the actual price that you pay for a stock and what is the price, the final retail price. You do know that when retailers purchase items from the wholesalers, they purchase it at a particular price value and they add a markup, and that is what is the with the added markup value. For example, if they purchase for 50 rupees, they'll add a markup of say 3 rupees and they'll sell it for 53 rupees. That is nothing but your MRP, the retail price, the maximum retail price, the MRP value which you pay as a customer for a product to the retailer is the MRP value, and that is with the markup added. That is nothing but the retail price. The actual price which he pays for the stock for that product is different, which will generally be lesser than the retail price which is being sold, because the retailer has to make a profit. So based upon this entire concept of the price, that is the actual price at which a retailer sells a product, as well as the price for which he pays to the wholesaler, or if he buys it directly from the manufacturer, whoever he buys it from, regardless of whom he buys it from. So this difference in pricing is nothing but the actual price of the retail price, and the difference in pricing is also what takes into account when we look at retail accounting versus traditional accounting practices which we follow. Why that is done, we'll see why it is done. Basically, to avoid theft or loss, theft in terms of either product theft, or loss in terms of the calculation loss if the money itself is taken away. How, we'll see an example. In the traditional accounting concept, basically most forms of accounting involve recording of every transactions at its actual cost. For example, look at this example, and that will give you a complete idea of what we are talking about. If a store might pay $100 for a box of 10 t-shirts, which means each t-shirt would value, let's say, $10, and you're paying $100 for a box of 10 t-shirts. But the retailer would sell 7 of these t-shirts at $15 each. So basically he's added a markup of $5 per t-shirt. So he's selling it for $15 each. 7 of them he has sold it that way with a markup. It will then have $105 in cash. That is what he has remaining right now. And what is the stock that he has? Which is nothing but three shirts have remained, which is of value of $30. So at the end of the day, what does he have? He has $135. He had paid $100 and he has $135 right now with him. Which means the overall assets is nothing but $35 higher than at the start of the entire process. The remaining stock is valued at the wholesale purchase price, even though it will hopefully eventually sell for the retail price. That is the remaining stock, which is nothing but of worth $30. Right now it is valued at the wholesale purchase price, even though it will hopefully eventually sell for the retail price. When you say hopefully, it's not necessary that he may be able to sell it for $15. He could probably be able to sell it for $13 or $12 also. But the idea here is, you're looking at the overall asset figure at 135, which is $35 more than the actual stock price initially what he paid at $100, and you will take this as the value for accounting in this case. What do you do when it comes to The retail accounting. Retail accounting means that at every stage of the accounts, the company lists inventory based on its final retail price. In the t-shirt story example, the purchase of the box of 10 t-shirts would be listed at $150. Now, you're not going to record the box of 10 t-shirts as $100, but you'll record it as $150 based on the selling price, based on the retail price, based on the profit that I'm going to make. So you'll say 10 into $15 and you'll mention it as $150, even though the firm actually paid $100. Now, after selling the 7 t-shirts, the same example as earlier, the company would list a cash balance of 105. Why is it a cash balance of 105? Because he has sold 7 t-shirts at $15. Now, what would be the remaining stock value? The remaining stock value would be $45 because 3 t-shirts at $15. But in the early example, the 3 t-shirts, I'll go back because that will give you an idea of what I'm talking about. Here it was $100 value, the actual price value, not the selling price. 7 of them were sold at $15, so 105 in cash, but stock was $30, total of 135. But in here, even though he has made a cash of 105, a cash balance of 105, the stock value is $45 and the stock value is not $30. We're looking at $15 selling price. If you add up, this adds up to $150, which will match the original $150 which you spent on stock. Because originally you're not taking 100 as base. Originally you're saying $150 is a stock value. In this way, the start and the end is easily measured. I can do a clear accounting from a retail accounting concept, because retail accounting is more on the inventory stocking at the final retail price. Why this is done? Because the main purpose of retail accounting is to track any disparities in stock. Disparities in terms of stock being, what do you say, you're losing either your stock with somebody stealing it, or it's also in terms of the cash that could also be stolen. This can be done simply by keeping track of changes in inventory value, expenditure, and revenue from sales, all calculated based on the final retail price. If, in the t-shirt example, the company ended up with a cash balance of $105 and a stock with a value of $30, which is 2 t-shirts at $15, okay, the total is 135. That was the earlier case. This does not match with the recorded purchasing expenditure of 150. The disparity shows that either stock has been lost or stolen, or that the revenue from a sale has been stolen or misled. Misled. Sorry, that's led. Okay, simple concept. There's nothing much in retail accounting. If you have to go deeper down, when you look at all your other statements, you see that the statements actually match your retail accounting. But this is followed in only a retail stores, and they don't follow the traditional accounting concepts. Retail audit. We look at the next concept. That was a very small concept. Retail audit is actually a bigger concept. So when it comes to audit, you do know what audit is and why do you perform an audit. Audit is performed regardless of retail. It is performed across every industry, across every sector, across every department. Even an individual owned startup also performs an audit. I mean, you can perform an audit even at your own finances. You can also have an audit at your home. An audit is nothing but anything that you do to ensure that if you have had a set standard or set best practices in place in the beginning, an audit is performed to see whether you're following those best practices, whether you're following those standards, and if there's any deviation in standards, you try to correct those deviation in standards through a control mechanism. So basically, audit is nothing but that. And you can have a control, you can have an audit which is timed, or you can have an audit which is not timed. I mean, suddenly you can have an audit without announcing it. Let's say college audits. We're suddenly conducting a lecture right now, which is virtual, and but if we are doing a physical class and during normal times, you could have an audit officer suddenly just coming in a college education block officer. We call them, I think it's block officer, block education officer. Not getting the term. Okay, it's something like that. He could just come to a college and just do a random check to see if everything is in place, everything is how it's supposed to be. and he could just enter the class and see if everything is being followed. People are the class is being conducted according to the standard operating procedures. SOP. Right now we have an SOP right now during COVID stage, that we're supposed to have an entry register where students come in and fill their details along with the temperature check, along with the sanitizer should be in place. Students should maintain social distancing, of although that is not being followed, which is difficult as humans to enforce it, because that's not being followed even in public places as well as buses. You cannot, at least in a country like India, you cannot really enforce it. But we are supposed to follow it, or we are supposed to enforce it. So anybody could just come in, an education officer could visit this college, do a random check and see whether we are following the standard operating procedures. We do have everything in place, everything in check, whether desks, a single student sitting at a desk, and whether there's enough of social distancing, at least at a desk, at least during the exam time. If something is not being followed, he can penalize the college for it, and he could take certain actions so that the procedures are followed. That is nothing but an audit. An audit can happen. I give an example of an audit in college for a small case to case, for small case basis, and it could vary from case to case. Retail audit service providers gather information on the brand sales volume, sales trends, stock levels, effectiveness of in-store display, and promotion efforts and other associated aspects. Now, each of this is different categories for retail, and you can perform an audit at any of these categories. It is a vital evaluation tool which systematically examines and evaluates a firm's total retailing effort or a specific aspect of it. Importance of a retail audit. It identifies, this is a little too small, but I'll read it out. Identifies action steps for store management to drive revenue and reduce costs. Provides training for store management and associates. If you're not following the procedure accordingly, then you can be trained to follow the procedures and best practices. And definitely, an audit always results in an action. It results in a report, and the report will result in an action. The idea is to ensure that you have optimum utilization of your resources, optimum practice and best practice being followed, because you want to ensure that you have more revenue and reduce costs. It fosters a culture of accountability and integrity. If you do not perform an audit, you would think that nobody is monitoring me, and you could do everything based on your whims and fancies. But if you have to be accountable for every action that you take, and you should do it with a sense of utmost integrity. Identifies leading practices and potential enhancements to store policies, procedures, and controls. That's self-explanatory. And you can have change in your practices too, because you can have some enhancements. You can realize that maybe we started with this kind of thought process, this kind of standards, but we realize when we're doing an audit, something is missing. We need to probably enhance, we need to probably tweak something, we need to probably change something, and we'll do it accordingly. Provides opportunities to solicit feedback from store personnel. Now, you can go down to the level of, when you're doing a retail audit, you may have a chart, you may have some kind of questionnaires, or you may have some kind of checkbox. They generally, retail auditors, they'll have kind of set um document, and they'll see, okay, step one is just being followed, step two, etc., etc., etc. But they'll also have an open-ended questions, open-ended blank sheet, from where they will take in feedback. And who are the best people to provide feedback? People at the store personnel, the sales personnel. They will tell you exactly what can be tweaked, what can be added. They'll provide some useful suggestions for improvement of a store. Or they might know a customer very well. They might know a store very well. They might say things are not placed where they should be placed. We feel these things, changes were might in the store. Maybe these changes in arrangement of a store would lead to a better performance. Maybe these things where the arrangement of the shelf or the lighting, they could provide any etc. suggestion. So you identify gap in the brand consistency and service delivery across all stores. So it need not be for a store. You can even do a area wide for all stores, for probably a bigger brand who have many stores across many places. Measures the operational performance and provides visibility into key performance indicators, which enables management to make informed business decisions. We look at what are the key performance indicators as an example to for you to understand what are the things that generally are measured when an audit is performed. Prevents potential legal fines or penalties by proactively identifying issues. Exactly. If we do in college audit before we have an external audit, so there are internal audits and external audits. If you do an internal audit in your company, you avoid the problem of running into facing penalties or legal fines if an external audit is performed. By the way, even big companies do not are not spared by auditors. You have government has auditing firms which can take up an action across any of the corporate firms which operate in India, because the government has its own legal provisions for auditing that you should follow certain best practices. Even though certain companies might have its own practices, every company has its own SOPs defined, but it has to be in accordance with the legal laws. So government has auditors, which goes, you might have heard of auditing happening at different banks, bank auditing and stuff like that. Generally, audit is a term is used when it comes to finances. But finance is not the only auditing that is done. Procedures, process, operations, it could be across any departments. The final point assists in the prevention and detection of internal as well as external theft, very particular to retail audit. Performance measures, some of them for your information. Sorry about that. Give me a minute. Okay. Total sales, average sales per store, sales by goods, service category, sales per square foot, gross margins, GMROI, operating income, inventory turnover, employee turnover, financial ratios, profitability, etc. I wouldn't go into detail of each of those because that would become a very retail KPI kind of a class, and each of these are not measured individually, but they are measured in conjunction with some other metric, because they all have to be seen on a particular report to understand the store performance and whether it is in accordance with the set standards and policies. For the KPIs, formulas given there, expressed as, etc. So you remember I told you generally when a retail store, they look at sales measures, they look at profit measures, they look at employee productivity, inventory productivity. Remember I had explained to you that inventory turnover, when you look at inventory turnover, you look at certain things like, if you look at GMROI. You see that markdown, planned end of month inventory, planned beginning of month inventory. Now these are very important. Generally, these are looked at in inventory management. So return on assets and space. Sorry, I'm not getting that. Where is that? It's a little blanked out for me. Yeah, I can't read it. I hope you're able to read that. But you see, every area is equally concentrated when you look at an API. KPI. Utilizing gap analysis, you can also use the technique of gap analysis. Again, for your information, for your knowledge, what you do in service marketing gap analysis, you can do the same thing when you do an audit also. You set some performance standards, you're going there trying to measure, and you're trying to determine what are the gaps. If your performance is expected, and if your performance is better than expected performance or worse than whatever it is, you'll try to do some kind of a adjustment and tactics accordingly, so that the next time you have better performance standards. And when you measure, obviously you're going to not just look at your own performance, you're also going to look at other firms' performance as well as your own performance in terms of other factors. The categories of a retail audit, specific retail audit, you can do a retail audit or a wholesale audit. We are only concentrating on retail audit because we're measuring the sales to final consumers, but now wholesale audit also looks at the amount of product movement from warehouse to retailers. At the end of the retail audit, of course, what you want to do is, at the end of the day, you want to increase not just the efficiency in terms of salespersons, as it's mentioned here, but also increase efficiency, overall process, overall revenue, overall uh, not just process and revenue, but overall you want to ensure that you do not have any loss and theft, and basically you try to ensure that at every level you are having some kind of an improvement. Types of retail audit, whether it's a process audit or a customer audit, because the other personal involved, or the other parameter involved is customer. When it comes to retail, it's not just retail process, also retail service, retail employees, but also the customer. We looked at the KPIs. The KPIs give you an example, give you an idea of all the broad areas. Customer audit, this is again for your reference. Customer audit, if you have to go in detail into customer, what are we trying to do? We're trying to understand a customer here. Every customer who visits a retail store, different retail stores will be different, because different areas will have different types of customers, different types of market demand. So a big retailer brand will try to do customer audit to see what are my customers coming into my area. Defining consumer behavior in retailing, conducted to assess whether it is effectively using the principles of consumer behavior to maximize business, involves getting to know and thoroughly understand the customers who purchase a business product, services, and to use this knowledge to effectively analyze business effectiveness in meeting consumer needs. So it requires observation of customers, interviews with customers, auditing and trying to find out what they buy, when they buy, satisfaction, their dissatisfaction levels, what are their decision processes, how do they go about buying a particular product, and what are the other variables that impact the consumer decision making when he comes to a retail store and purchases a product. Finally, you draw conclusion, make a retail recommendation that you improve the stores. Of course, you improve the customer satisfaction level or the experience of a customer. You're going to have better sales coming into your store. So, customer audit, retail audit is the entire processes which we have seen KPIs for it. What are you going to trying to measure at different levels? How do you select a store? Now, I want to basically do an audit. How do I select the store based on my audit? I can do a routine audit, uh, which gives an understanding that you're being monitored, so you're going to have some kind of accountability, some kind of integrity within you. Easy to compare audit results across all stores over set time period. Audit is always performed either monthly or fortnightly, or you do it in every quarter or every biannually is what you do it. And whatever audit results can be built into performance evaluations or bonuses for store management. You're doing well, you need to get some reward, and that gives you a better motivational boost to perform better the next time an audit is done. The college level audits which we have, which come from the university or the UGC level, University Grants Commission, is a NAC audit. The NAC basically tries to audit colleges, and if everything is in place based on the NAC criteria, they have a lot of criteria there. Criteria 1, 2, 3. They look at teaching requirements, infrastructure requirements, student support, the level of and the kind of student backgrounds. What happens? They look at placements. They look at whatever is what happens to students. What do they after that? Do they take up competitive examinations? They look at students' participation in cultural and sports activities. Then they look at governance principles. They look at the management who run the college. They look at what is the kind of facilities we get. We look at research grants. What is the level of research? What kind of research do the faculties do? And which different journals do they publish? Are the journals highly recognized? If they're international journals, national journals, and as the faculty are time has to be split between teaching as well as research. And most of the colleges, they get high grants or high marks based on the level of research that they perform, because end of the day our job is not just to teach, but our end of the day is also to contribute back to the knowledge building, so that every time we contribute back to the society in terms of knowledge building, we have something new coming up, and something new comes up is always something that can provide and do some change. Teaching is only ensuring you understand, but when you go take a next level of research and contribute, that provides some kind of change. So a college is evaluated on many parameters, not just one parameter, and it's always a continuous building activity. It also looks at the administrative, looks at many things. So you try to have some kind of best practices from strong performing stores. I'm coming back to the slide when I moved away to talk about college levels. So cycle based. NAC happens every 5 years, by the way. So cycle based on approach. So based on the store selection process, and risk based. Risk-based is generally happens when you understand that higher risk stores are audited more often, enabling management to timely address issues impacting store performance. When you know that a store is not really doing well, you have a low performing store. This is the time to audit it to see what is going wrong. Why is that store not performing well? Is it because of the store personnel? Is it because of the store promotions? Is it because of some kind of branding issues? Is it because of some financial problems there? Is it because of not being able to understand the demand, not being able to capture the market, not being able to understand the customer? Some kind of audit requires to understand whether the process is being followed. So it is cost effective since it requires less resources to meet the risk appetite because you're not doing it on a regular basis. You're doing it only when there is a problem. It provides the auditors the option of not utilizing the full audit program by only reviewing high risk areas which may enable greater overall store coverage. So you're also saving costs. You're not employing a lot of auditors. Not you're trying to save costs because you're only going to do an audit when there is a problem or when there is a high risk problem. Otherwise, everything's going well, life is going well, everything's going in the right direction. Same thing with us. When everything is going fine in our life, we don't think. But when something's going wrong, we try to assess and see what's going wrong. So, which is not the right way to do things, but we land up doing that. We take a risk-based approach. When something's not working, we see what is not working. When something is going fine, we don't take a break. We don't pause to see what can be done better. Ideally, we should always audit, and the audit for ourselves is nothing but a SWOT analysis. Okay, I won't digress and talk about SWOT and individual analysis, but we look at retail audit analysis. Retail audit process, the entire process of retail audit. We determine who does the audit, whether it's company specialists, department managers, or we will employ some outside auditors. When do we conduct the audit? Whether we do it end of calendar year, end of fiscal year. Fiscal year is nothing but the cycle from April to March. So that is the fiscal cycle. When undertaking physical inventory, when the audit is conducted, whenever we get some kind of stock into the store, do we do it that time? What are the areas to be audited? Horizontal, vertical is nothing but whether you're looking at the entire up-down structure or you're looking at horizontal, you're looking at it across stores or you're looking at within stores, what are the areas? Now that area, we've already talked about different areas, finance, process, brand, customer, those are the areas basically when you see areas. Basically, then you'll try to come up with some audit forms, some standards, some practices, you'll try to define it. Once you have defined how, what goes into an audit, you conduct the audit and you see how long should the audit take. 2-week audit, 3-day audit. Should employees be notified in advance? Should you tell them that an audit is happening or should you do a unnotified audit? Is audit to be disguised or non-disguised? Do we do it in such a way that they know that an audit is happening or do we do it non-disguised? Should audit occur while retailer is open or closed? When it's closed, what do you mean? I mean, you'll be asking a question. How do you do it when somebody is closed? When somebody is closed, you can always check into the computer. You can do it remotely. How is the final report to be prepared? Do you want, excuse me, reporting the results of audit to management? Finally, you have to report the results and then management will look at it, do some kind of change, and the management will take some kind of an action. That is the entire audit process. Areas, again, a standard audit that should be considered for most retailers include inventory management, cash management, human resources and payroll. Oh, yeah, I forgot this. You can also do a human resources and payroll audit. Merchandising audit, we have already looked. This is one of the departments. Customer, we have looked at it. Security and legal compliance. Yes, legal. Are you legally being I think I covered this. What is your legal implication? Are you following the legal implication and are you following the legal rules? However, there may be specific audit questions retailers should consider based on their type. For example, grocery retailers may need to monitor products with expiration dates. Now, that is very specific to certain kind of products. So, you may add certain extra questions. Now, again, this will vary to see whether store, and I see this. If I have to do an audit, I see this. Some stores do this when it comes to selling bread. You might have noticed this. When it comes to selling bread, uh, I go to buy bread. Generally, bread would have passed its expiration date. Uh, 5 days is what bread will last for, but they will still sell the bread even after 5 days is passed. They're trying to push it out. Actually, they should not be doing that because the people who come and sell the bread to the retail store, they take it back once it's not sold. Unsold things are actually taken back, but these people still try to push it. The ones which are fresh, they will keep it below. The ones which are nearing the expiration date or have passed the expiration date, keep it on top. Nearing is fine, keep it on top because they want that to be sold. But after expiration, I've seen so many people sell it, and I've seen that, and I've always taken it, kept it aside, and taken the fresh ones from the bottom. Always see the fresh ones will always be at the bottom, especially when it comes to bread and some products. I don't know. I have noticed this only with bread. Obstacles for doing a retail audit. Audit may be costly. It may be quite time consuming. Performance measures may be inaccurate if you have not defined it correctly. Employees may feel threatened and not cooperate as much as desired. They may feel threatened if there's something to hide and if they have not followed the practices properly. Incorrect data may be collected. People who are doing the audit may not be experts and they may not be trained and they may not collect the data correctly. Management may not be responsive to the findings. Sometimes you do an audit, you go through all that effort and trouble, and finally management does not take any action. So the entire exercise itself goes for a toss. Okay, we have finished that concept. Take a pause. We look at a very small concept: retail store brands or private labels. What we covered so far was retail accounting and retail audit. Audit was actually simple. We only had to look at levels of audit, areas of audit, process of audit is what we looked at. And what is an audit? And what are the obstacles that come when we look at an audit? So understand the entire concept, know the concepts, you'll be easily able to explain every area around it. Now we look at retail store brand or private labels. Very small, very simple concept to understand. A private label brand, often referred to as in-house brand or store brand, is that which is owned by the retailers themselves. Now, what do retailers do? They sell brands by every other company. But they also, over a period of time, a retailer will develop his own brand. Like Spar is a retailer. Spar will sell wheat or rice by different rice suppliers. You'll have wheat by Ashirwad Atta, you'll have Annapurna Atta, Pillsbury Atta being sold, but you will also have Spar selling its own atta under Spar brand. That is nothing but retail store brand or private label. That is a concept. That's it. Simple as that. A brand that is owned and marketed by a retailer business involved in selling goods or services directly to the final consumers for their personal non-business use is called retail store brand. Why do they do this? They get a advantage. Retailers also get the upside. They not only make more profit by selling private label brands than the brands which they stock it up, margins are 60% more than what they get from FMCG companies, because in the FMCG company there's always that buying at wholesale price, adding markup and selling. Here, when you are having your own brand, you can decide at what pricing you want to sell it, at how much of discount you want to sell it. In fact, if you notice, most of the retail store brands, their own brands, are always cheaper than the brands which are being sold by the other companies, because the retailer can decide the price. He's fully in control of it. He knows the where to buy the raw materials from. He'll buy it at the cheapest rates and he will sell it under his own label. These labels help differentiate themselves from their rivals. So you sometimes go to Spar if you're a Annapurna guy, if you're a Ashirwad Atta loyal fan, you'll always go and buy that. But if you try to want to experiment and you say, okay, Spar Atta is just the same. Wheat is wheat. Let me go for Spar because it's cheaper. So you'll buy the Spar wheat, or you'll buy Big Bazaar wheat. Big Bazaar, I think wheat is called something. They have a brand. I forgot what is Big Bazaar brand called. But every firm will try to retailer will try to have a new name. Like Spar is it's called Spar itself. Uh, sorry. I'll send you a separate note on all most of the some good examples of most of the retailer brands in India and the labels under which they sell different products under their own different retail labels. I've given an example there. Pantaloon sells some electronic products under the brand name Koryo, and products there are what do you say, ethnic wear, cosmetics also being sold under different brand names. John Miller is their garment, their own brand, Pantaloon. Even though Pantaloon sells the other brands, Levi's and everything else also it sells, but it also has John Miller. Vishal Megamarts has its own brand called We Need, which is nothing but toothpaste called We Need, and you have salt, We Need salt, which is Vishal Megamart's own brand. What happens in the long run? They can use the private labels to attract customers. Private labels started with retailers wanting to offer cheaper substitutes. I've also already mentioned that because you want to ensure that the cheaper substitutes that you offer compared to these big brands, you will make more sales, and that's like an add-on sales for you apart from the sales you make by selling the other brands. Thank you so much. I'll send you on a note on the retail store brand separately, which will give you more examples because there are a lot of examples out there. You can take up Shopper Stop. Okay, I remember Shopper Stop has something called Kashish, their own brand called Kashish, and Shopper Stop has some more brands also under its label. Thank you. We'll meet you in the next video.